start out talking about what's going on in the general precious metals markets, but come back to silver and again, determine just what exactly is happening in the silver market that is so unique right now that I believe could lead us to prices that are almost unbelievable. But let's head out to Kitco and see what they're saying about the gold and silver market. Gold prices last week dropped by 6% from all-time highs, but the rally is far from over. After a significant rally Tuesday evening, the gold market has cooled considerably heading into the weekend. Many do not expect this week's top to represent the high for the year. So we had gold prices on Tuesday, guys, get above $3,500 per ounce. Can you believe that? I mean, do you remember being down here in the basement just a year ago when we had the gold price? We had the gold bear still blindfolded, and people were telling us that the idea of $2,500 gold was preposterous. I was accused of clickbait on my YouTube thumbnails because we talked about thirdly, look how far we've come. We hit $3,500 gold on Tuesday. And by the way, I want to say thank you for joining me here in the basement, guys. This is a big deal when you come down here. We love to talk about gold and silver. This content is gold and silver focused for the precious metals community, also for people in the crypto community who've been asking me to put out some content that focuses on gold and silver. You're all welcome here. Please subscribe to the channel, give the video a thumbs up, and super chats, super thanks are never expected, but never expected. No, they're never expected and always appreciated. That's what I'm trying to say. Let's get back to what's happening. We are moving into a very pivotal week for precious metals. And then again, we're going to talk about why silver is positioned right now in such a way that we could see incredible, I mean incredible returns in silver in the coming months, year, and even decade. Let's go back to our friend Niels at Kitco, who also shares with us Jesse Colombo, right? This guy's like the big man in the gold and silver sector right now. Hats off to Jesse Colombo. He's been spot on with many of his recent predictions. Let's listen to what he says because there's a big reason why we could be concerned after listening to his ideas about what is happening in the gold market. He's the founder of the Bubble Report, and he described gold's recent price action as a healthy pullback. He added that he could see gold consolidating through the summer and is looking for prices to hold support around $3,000 per ounce. Oh, come on, Jesse. Gosh, guys. So we could be heading down to 3,000. He says, quote, I believe gold is still in the early stages of this bull market. Pullbacks are normal, regular occurrences, even in the most epic bull markets. Given this view, I would still not sell any of my gold bullion. Well, that's good to hear, but I would take a more defensive short-term approach on futures or mining equities. Guys, yeah, here's the bad news, right? Here's the bad news. Nothing goes straight up. Nothing goes straight up, whether you're talking about gold, silver, wheat, stocks, cryptocurrencies. Right? If it's going to go up, it does it in a jagged line. So we could see a pullback to this $3,000 level. But let's talk about the big uncertainties that we're facing right now in the markets. Two things: China, the China situation, and also the economy and how that's going to play into the precious metals prices, including silver. But don't forget, at the end of this video, we got some good news about silver. Analysts note that renewed selling pressure in gold comes as fears over the economy begin to ease. While there's still plenty of worry swirling throughout financial markets, some economists argue that the economic uncertainty has peaked, right? That everything is like we've reached peak economic uncertainty. Well, let's read on and kind of read between the lines. Lukman Otungla, senior market analyst at FXTM, described gold's price action as a bout of profit-taking, but adds that the fundamental forces supporting gold remain in place. The week ahead is, hold on a second, I forgot to turn on Susie's walkie-talkie. There we go. The week ahead is stacked with major U.S. data and corporate earnings, which may shape overall sentiment. So we've got Big news coming this week. We're going to get the latest U.S. GDP, the Fed's preferred inflation gauge, and the U.S. jobs report could influence the Fed cut bets. Meaning, guys, that we're going to get all this data this week, and that could impact what the Fed's rate cut expectations look like going forward. We can go to the CME Fed Now tool, which we'll do here in a little bit, and see what people are expecting. But we could have some short-term turbulence based upon the economic data that comes out this week. And we've got a lot of economic uncertainty. Let's see what Thu Lan Yungying, head of FX and commodity research at Commerce Bank, said she sees gold sell-off as a temporary setback within a broader uptrend. Quote, it remains unclear when and in what form an agreement with the Chinese leadership is possible. There have been different statements on this from the Trump, U.S. Treasury Secretary Scott Bessent, and Beijing. So gold is likely to remain in demand as a safe haven for the time being. Then they say employment data will be the focal point of markets next week, as April's non-farm payrolls report will show how much of an impact America's tariff policies and austerity measures have had on the labor market. So we've got all these things coming together, right? And I want you to think about what is the evidence that we see out there in the market, right? We're hearing from the major airlines. They're like pulling their forecast because people are canceling vacation plans, okay? We're hearing from the mortgage industry that mortgage applications were down, last month, 13%. Think of why is that a big deal? I'll give you the reason why, right? Because this is the spring home buying season. I was talking to a neighbor of mine last night. I was sitting out on the front porch trying to read a few pages of a book, and my neighbor walked by who's a big realtor here in St. Louis. And I'll call him Mr. T. And I said, hey, Mr. T. And we chatted for a minute. I said, well, how are you doing? He said, the real estate market, even in St. Louis, which is a laggard, is slowing down. So we are getting economic uncertainty, right? I mean, they talk about how this will impact the precious metals markets. Well, economic uncertainty is here right now. Has it peaked? We're gonna find out. Let's go back to our article. Okay, however, now we're going to talk about silver, guys. The smartest analyst in the room, a guy who I've actually had as a guest here in the basement, super highly respected, very, very smart, Phil Streibel, chief market strategist at Blue Line Futures, has something great to tell us about silver. He said it may be time for investors to look further down the value chain in the precious metals market. He said he expects silver to start outperforming gold if financial markets have reached peak uncertainty. Quote, if industrial demand is able to find its feet, then we should see renewed demand for silver. We already see some investors rotating out of gold and into silver this week. And we'll come back to that, the gold to silver ratio. Guys, but what we're seeing right now, if you're a silver investor, if you're into silver, is that we are in the early stages of silver just starting to move. I agree with Phil. I agree with the fact that the underlying industrial demand for silver alone is a very bullish factor. But silver is also a monetary metal, like we know so well. And what we're starting to see and what I'm starting to hear and what I'm being told is that there are people who are starting to convert some gold into silver for all the aforementioned reasons. I mean, we know the current silver price at $33 per ounce is significantly lower than just the nominal all-time high that we hit back in 2011. 2011, we hit $50 per ounce in silver. Measured in today's dollars, that's probably more like $75 or $80 per ounce. So the opportunity for silver, which always, by the way, always lags the move in gold. Gold's had its big, massive move. Where's the gold price going to go? We don't know for sure, right? I think that realistically, thinking that the gold price could dip below 3,000 just doesn't seem like a real realistic situation that we could see occurring. It just doesn't feel like that could happen. But the silver price has yet to fully react, right, to the gold price. And on top of that, we know, right, that if a little bit of the investing community comes back to silver, that could be a big way. In the United States, in particular, hardly anyone's buying physical silver, which I believe is a big, big, massive, massive mistake. There's no other way to say it. And if silver catches on, right, if that pendulum in its beginning starts to swing back the other way, and the individual investors in the United States start to buy silver, there's not going to be enough silver to go around, right? On top of that, if the Fed starts to cut rates, right? Let's go take a look. I promised you we'd take a look at the CME number. Let me go out here, and I'm going to show you guys how to go check this out for yourself. We're going to share this. Okay. Now, all you have to do is go into Google and type in CME Fed Watch tool. There it is right there. And this will tell you how many days we have until the next Fed meeting, which is now only 10 days away. But the important thing that we want to look at are expectations, right? Right now, if you look here, I'll give you the two key numbers to look at, okay? This is the current rate that the Fed, Jerome Powell, has, right? 4.25 to 4.5. Here it is right here, same thing. So this is telling us that there's almost a 90% chance that rates are going to remain the same, okay? But, however, let's go out a full year from now, just for kicks and grins. We'll go all the way out. I clicked up there on April of 2026, okay? Again, here's the current rate, 4.25. That's where the rates are. If we look down here, there's almost a 0% chance that rates are going to be the same a year from now. There is let's just draw a line here. That's 3.25 to 5.5. There is a 27, let's say 60, 70, 80% chance, okay, that rates are going to be a full percentage point lower or possibly even more, right? Look, there's a 30% chance we can see that rates are going to be in the 3.0 to 3.25 range. So as this occurs, that will provide additional support behind the gold and silver price. Let's go out to the U.S. debt clock, right? That, of course, right? That right there, the 37 trillion in national debt will provide support for the precious metals prices and silver. But let's go over just a quick reminder, something we love to look at, which is the dollar to silver ratio, which for some reason it won't let me draw over here anymore. But you can see my yellow finger, see my yellow pointer, my yellow finger. The dollar to silver ratio right now is at 1,044. Right. So look, it's inevitable as we go into this coming next 10 years where we are absolutely in a stagflationary environment. The United States, unfortunately, and I love this country, right? But I'm just telling you the reality of the situation, has dug itself in such a horrible fiscal hole, right? The fiscal policy, that's what the government does. All the debt we've racked up. It's forcing the Fed to put us in a situation where we are having stagflation in this country. We are going to have a stagnant economy. We are going to have simultaneously inflation, and there's really not much the Fed can do. It's called the hens coming home to roost. It's also called the most fertile soil that you could ever ask for precious metals prices, for the gold price and the silver price. Now, I feel like silver is positioned particularly well to benefit from this as we move into this next 10-year period, as we move into the next 10-month period. On either time frame, silver is just positioned to do very, very well. Let's go look at and do a quick calculation of the silver to gold ratio. And if we go out to CNBC, and let's refresh this and look at the gold and silver prices. Okay, there we go. Gold right now, $3,300 per ounce. Silver, $33 per ounce. Look, you don't need a fancy calculator to figure out that makes the gold to silver ratio currently be sitting at 100 to 1. If we have all these factors, people shifting financial assets into silver, right? On top of that, industrial demand increasing for silver, and the fact that gold isn't going anywhere, and we have a gold to silver ratio 100 to 1. Are you kidding me? Are you really going to trade right now 100 ounces of this? Right? Beautiful silver, 100 ounces for 1 ounce of gold. Is that contracts? That's like a rubber band that's been stretched out. We are in for some great times in the silver market. Hey guys, thank you for being here. Thanks for being part of the basement. Okay. I appreciate when you come down here. I want you to come back. We love to talk about the precious metals. We love to talk about the economy. Okay. So have a great day. Take care of yourself, and I'll see you soon. Let's get ready for some much higher silver prices. Take care. Bye-bye.